Yo, what's going on, guys? Welcome back to another video. In this video, I'm going to be talking about order blocks. A simple way to find order blocks. Doesn't have to be overcomplicated, okay? Now, if you're struggling with trying to find these and you're like, I don't know which one to pick, this video is for you. Before we get started, I want you to like and subscribe. Go join that free Telegram if you have not joined it. I did get some messages about why don't I post in there frequently, and it's because I do not trade every day. I'm only posting chart markups of trades that I'm actually taking that are high probability, okay? And I want you to train your eye for those. That's the reason why I drop them. I mark them up so you can have them as flashcards, okay? So if I'm not posting in like 5-6 days, sometimes I don't trade a week just due to the fact of how the week is panning out. Or I'll take a trade and I'm just like, okay, yeah, I won, but that's not going to benefit them, okay? So I'm not on socials yet. I will be soon. I'm trying to meet a goal. I want $500,000 worth of funding by the end of the year, and I do not want to get distracted. So if you message me, I'll message you better, okay? So let's dive deep. I'm going to share my screen. As you can see, drawings. Okay. Guys, if you don't know what an order block is, this video is not for you. I'll probably shoot a basic order block video. I'm sure you'll, get the swing of it as you listening, but, an order block, all it is, the last up candle before a fast move down is a bearish order block, okay? The last down candle before a fast move up is a bullish order block, okay? Because what we want is price to return to mitigate that and potentially take a trade from, okay? The sound order block, so the order's coming down, we want it to block, right? That's the terminology of order block, okay? So, and shout out to ICT for these concepts. These are his concepts. So I'm giving him all credit. Okay. So as you can see, the ones that I choose are the ones that are obvious forms of order blocks that I know price will return to. Okay. I'm not taking every down candle or every up candle as an order block. Okay, I want ones that have not been mitigated, that have fast moves away, that have a custom with fair value gaps and things like that. So in this instance, and I'll redefine, as you can see, we'll do this bullish order block here, and we'll do this bearish order block here, okay? So what I'll do is, as you can see, this last up candle before a fast move down, okay? So what I do, usually what I do is I'll go to the lower time frame and I'll redefine it. I'll see what it looks like on the lower time frame so I can make it smaller for the mitigation. So like if you kept it on the daily and we end up getting into the order block and you started taking a trade and it went against you to mitigate more of the order block and the fair value gap, you're wondering why you got stopped, right? So as you can see, this is a clear, easy way to mark up an order block. You don't see me trying to do anything else, okay? So this is a significant area to me. When we reach there, I will be starting to look for something to react there, okay? And the reason why I'm choosing this is because, as you can see, last up candle, fast move down, a custom with a fair value gap. We broke structure to the downside and it has not been mitigated, okay? So that right there is a high quality, high probability order block. So when price gets there, I want to see what it's going to do. Okay. So choosing every order block is not going to be in your favor, right? So I'll explain here on this here. So once it gets there, like I said, I want to see reaction. Okay. So just like if I went to the hour and we moved down, because the way the market moves, okay? As we're moving down, we're going to be pulling back, moving down, pulling back, moving down, pulling back. So your objective is to see what point of interest it wants to pull into, okay? So as you can see, as we move down, you can see this last up candle, we moved down, okay? So we moved right back up and we mitigate. There's nothing there, maybe on the lower time frame. And I'll see, we'll box that in just to see if that order block right there, that last up candle for that down move was something that we could look at lower time frame. Okay. Now as you can see, as we move down, we create another up candle and then a fast move down, creating what? A fair value gap. Once we get into the new day, that is something that I want to pay attention to, okay? It has an order block to come back to, and also a custom with a fair value gap that it can mitigate, fill, okay? So what I do is I would draw this out, and then I would go to the lower time frame to look for a redefinement, okay? And as you can see, right there, that last up candle, okay, right there, before a fast move down, we broke structure, leaving fair value gap. We return to the bottom of that candle, filling the fair value gap. We did not come back up to this one, and we end up mitigating that for another move down, okay, for another move down. Those are the order blocks that I choose, okay? That's a custom with a fair value gap, something for it to come back to. I need a reason for it to come back to something, okay? If it doesn't do that, then I don't mess with it, okay? Now, guys, order blocks is just another form of confirmation. This is something that you can say, cool, there's an order block there. Now let me get inside my session, custom with other things, you know, is it accumulation, manipulation, distribution? There's a lot of things that go into taking a trade. Okay, so this is me showing you the order block theory, is me breaking down exactly what I do in a daily basis to figure out where my market is drawn to and where it's going to head, right, for the day. So as you can see right here, a custom with that last, I would call this doji candle, order block, but it might be in the lower time frame. So that last up candle, okay, fast move down, break of structure, fair value gaps, we return, we hit the bottom of that candle, we feel inefficiency, and then we move away. So we mitigated that one. So if somebody drew this out, was like, oh, I'm waiting for there, and then you end up missing the trade because it already made a new one with things that are accustomed with it to come back to, okay? And then end up moving away from there, okay? So when we get back to, like I said here, when we get back to this has not been mitigated. So I want to see when we get there, what it's gonna do. What is it gonna do? Okay. So now, as you can see up today, we had a down candle, fast move up, leaving inefficiency. So what is that? You don't see me looking at anything else. This is the 1 hour time frame, right? I want to see something that I'm not grabbing this one. Even though that it is a down candle, move up, mitigated, I'm not grabbing that. I'm grabbing this one that is obvious. It's something that it's basically missing something, right? It's missing a mitigation, right? Down candle, inefficiency, come back into the extreme because I want the best entries I can get, right? So when it reaches back there, I'm going to look for reaction, okay? It's going to do one or two things. It's going to react or it's going to blow right through it. Okay. Same thing here. Same thing here. You can see that we moved away, down candle, moved away. We kept moving away. We come back. We get some of that order block. You can create, this is all one down candle. So we go to the 4 hour. This wick here, okay, it's down, move up. You can see that we return to it. Okay. So once you get down to the 1 hour, you can redefine your order blocks, and they look obvious like that. Okay. So you can catch a better entry, right? Same thing on the daily time frame. Do you see how I didn't really, you can see this one got blown right through, okay? And this one here had an order block, fast move up. We come back, we mitigated some of it. We took back off. And then now you can see that this right here was the line of defense for it. Okay. Was the line of defense. Either also leaving relative equal lows. Okay. So that's what I like to see. So if we pulled away from that, we could potentially, if the market respects this order block, potentially, if we continue bearish, we'll run through those equal lows really quickly. Okay. Now you can clearly see this last down candle, fast move up. It has this fair value gap with it. It's already been touched. It's already been mitigated. So what you would do is, if I put a box around this last down candle, let's just do it. If I go to the 4 hour to get some more of what's not been mitigated, you can clearly see that this candle right here has fast move up, fair value gap with it. I would be looking for price to react when it gets to that area. Then you can clearly see, okay, this is something that I would look at, but look what's here. Look at this down candle, last down candle. We can even redefine that. Let's just do the wick, bottom of that wick. Okay. A custom with fair value gap that has not been mitigated. This one right here is something that I would pick over this one. Okay. This is something that I would pay attention to. If price got close, let's see the reaction. Okay. These are really easy order blocks to pick out. You don't have to make it really, really hard. Okay. You can clearly see when we got on the way down here, right here, we can redefine this. Fast move down, has not been mitigated yet. Okay. Custom with the fair value gap. Okay. Why am I not picking these? These up candles move down. This is all accumulation. You can clearly see once we got back to this mitigation, this order block that was super obvious, we had a fast move down, a high probability setup. Okay. That's what I'm saying. You can clearly see as we stung in, that's another form of a great high probability order block, is you have a fast move up, okay, grabbing liquidity, a fast move down, a custom with fair value gap, no mitigation. Once you get back there, be looking for a trade setup. Okay. So it's pretty simple. Just like here, we took a form of liquidity, all these highs, okay, respecting another order block, fast move down, respecting, okay, filled inefficiency, took liquidity, left, right, leaving, last up candle, a custom with a fair value gap, fast move down, we return, we fill inefficiency, we respect the order block, see it. That's simple. That's simple. So you can clearly see that I'm picking out ones like, I'm just like, okay, when I got a fast move like that, and I look at my day as I look at, what's already happened, I'm like, cool, I'm going to mark that out. I'm going to mark this out because eventually price will get back here, and I want to see how price is going to react there. Bearish or bullish. Okay. I love to see those type of order blocks being done like that. Like here in this bullish market, when we left really quickly, I'm like, cool, I will mark this out. Okay. And when we get to there, you can clearly see that we didn't make it all the way to the order block. We made it to the top of it because you can account all of these down candles as one. So you can see 1, 2, 3, and then that bullish one, all that could be a 4 hour down candle. Okay. So you can see that it came to the top of it. We hit, and actually this was a breaker. So here's a low, high, lower low. We sweep that low. We go up. We hit the top of the breaker right there with that wick. Feel the rest of the inefficiency, and then we left. These are the order blocks that I want to pay attention to. Okay. Very simple, easy. Like I'm not grabbing any order blocks in here. No. I want to see a fast move away, inefficiency, hasn't been mitigated. Once it moves away, I'm like, cool, I'm going to mark it up. And then when it returns, I'm going to see what it looks like. See how the price reacts to it. Stop trying to look for all these, order blocks in the 1 and 2 and 3 and 5 minute. I mean, I'm not saying that they don't work, but you need to get some experience on your belt with the higher time frame. It's a lot easier. It's a lot not as fast. You're not making irrational decisions based off the 1 minute time frame. Get on the higher time frame, mark these out, look when price reaches them, look how it reacts. If it has your setup, take it. Okay. So guys, I hope you got value out of that. It's very simple. You know, wait for that. Wait for the last up candle. Fast move down, a custom with a fair value gap, mark it out, redefine it if you have to. When I say redefine it, go from, if it's on the daily, go to the 4 hour, see if the candle's smaller and mark it out. Because sometimes it will mitigate that entire thing and you're getting the best entry because you redefined it. Okay. So like I said, I hope you got value out of that. And also guys, like and subscribe. Inclines me to do more. I love it when I get new subscribers, especially comments. If you want a video shot, put in the comment section. I will shoot videos for you. Like I said too, that Telegram's not there for signals or nothing like that. It's there for you to learn. Okay. So keep pipping and dipping, and I'll see you on the next one. Peace.